Megan, what did you make, first of all, of Disney? What does it tell us? It is such a big name in the market. It tells us so much about the streaming business, about the parks business, pre and post pandemic. What did you make of it?
Yeah, well, I think what Disney showed during earnings is that companies that have that brand power, that have that pricing power, can continue to pass along price increases. And this really kind of epitomizes one of the concerns we have, notwithstanding the improvement in the inflation data. But if demand is there from consumers, companies like Disney, like Starbucks, Chipotle, the number of companies that we've heard who think they still have pricing power could be willing to pass it through. So some of that core inflation could be stickier as we move into the balance of the year. But, the consumer still has good balance sheet, relatively speaking. We have seen lower income consumers taking on more credit, but Disney has that brand power.
Yeah, and as you say, because of that brand power, maybe Disney is kind of an anomaly here. We look at other earnings like Sonos, right, and some of the chip makers. That demand pullback is being seen in some of these results. So, I wonder how much you can actually read into the broader markets. Megan, where do you think we are right now? We've been debating whether this is a bear market rally, but now the NASDAQ is in a new bull market.
Yeah, well, what we saw this year was really a sharp move in rates that caused a valuation adjustment for a lot of those higher valued companies. And then we started to move into questioning demand and earnings. Second quarter earnings showed that the demand is still there. Earnings are still solid. But, we're a little cautious. We're not sort of fighting the rally in the market and the technicals. They're certainly strong, but we're not buying here. We're not selling. We're fully invested, neutral to equities. I just think going forward, we need to be really sensitive to how rapidly the environment is changing. We heard that in really rapid change to guidance from Micron, from Walmart and Target earlier in the year. And we're going to be getting retail next week from an earnings perspective. And I think there could be some more talk about inventories building and some weakness on the consumer side there. So I would say, no, don't chase this rally, be patient, but we are staying invested in the market.
Yeah, Megan, as we look at these bigger picture inflationary pressures and still so much economic uncertainty, I'm curious how you think about this concept of the pull forward. I mean, we saw Sonos disappoint, and it seems like a lot of that was due to the fact that people already invested in those devices for their home. There's only so much that they're going to be spending on those, and that really was pulled forward towards the pandemic. If you look at Netflix, what we've heard from them, and then even with Disney, the fact that their domestic Disney Plus subscribers, that growth slowed dramatically. Do you think that all of these companies are or have seen a pull forward, and that means that as inflation increases or persists, we'll see growth continue to slow?
Well, I think definitely we've seen some pull forward in consumer electronics, PCs. That's certainly getting baked into some of the chip guidance and some of the earnings that we're getting from the semiconductor companies. I think going forward, I'd be focused on, as it relates to tech and the semiconductor space specifically, those companies that are more aligned towards cloud growth, towards data centers, towards those more structural trends. Autos are another great example. And just being a little bit more cautious on the consumer as it relates to consumer electronics, because I do think we had a big pull forward when it comes to goods. We're seeing that rotation into services that's helping companies like Disney and their earnings. But, we should expect goods to remain a little bit softer, except maybe if you're geared towards that enterprise type of business.